This podcast is intended for investment professionals only. All investing involves risk.
Hello, and welcome to another episode of L&G Talks Asset Management. As always, I'm Nick Jardine, Content Manager for L&G's Private Markets platform. Earlier this month, we released our report on how UK universities create a potentially ripe environment for private market investment. We see universities as important drivers of growth, both locally and nationally. Our report looked at the potential economic impact these institutions can have, as well as where university-related investments fit into a portfolio. I'm delighted to be joined today by Bill Page, one of the authors of the report, who's L&G's Head of Real Estate Research. Alongside Bill, I'm also thrilled to welcome Melissa Lockett, Investment Director, Investment and Place Partnerships, who'll be bringing an investment view to today's discussion. Bill, Melissa, thanks so much for being here. Bill, let's start with you. One of the points the report makes is that the university-related investments can be considered a cohesive private markets asset class. Why is this the case?
Thanks, Nick. Yes, we use the word nexus in the report because we see universities as kind of a fulcrum between investment opportunities in traditional real estates, credit, and venture capital, which are three of the four main pillars of private markets, the fourth being infrastructure. And we could probably make a tenuous link to universities and national infrastructure, but in our eyes, those three, real estate, credit, and venture capital, are the most important. We also see a fundamental investment opportunity at a very high level. There's been almost £15 billion invested into almost 2,000 university spinouts over the last 10 years. So that's a huge investment market. Elsewhere in direct real estate, we estimate there's around 800,000 purpose-built student accommodation beds out there. So as an investable opportunity, that is also significant. A stat I quite like is looking at the number of people in full-time education in the country. So we think there's around 3 million people in full-time education. That's roughly, with the emphasis on roughly, the same amount of office workers in central London. So there's a massive industry that's grown up around accommodating those office workers in London. We think the real estate needs for those 3 million students is equally important, and whether that's to house them, to educate them, to entertain them, or whatever. Final point I'll make to this question, Nick, is the importance of universities in the economy. So there's plenty of research out there on this that points to universities directly contributing around 10% of UK's GVA, gross value added, and about 17% indirectly, with around 800,000 jobs. We've also done a lot of our own research, which proves the point that if towns and cities attract students and also critically retain them into the workforce over the longer term, those towns and cities tend to outperform their peers in terms of long-term jobs growth. So all these things together really emphasize how important looking at universities as a cohesive asset class is.
Thanks, Bill. Melissa, I think that when our audience considers university-linked investments, their minds probably go to spinouts and the VC type of funding that can support those ventures. That's obviously a key part of this, but there's a lot more going on when we talk about this subject. And I was wondering if you could perhaps mention some of the other investment opportunities universities can potentially create.
Thanks, Nick. And you're absolutely right. I think most people tend to jump straight to spinouts when they think about university-linked investment, and that's fair. There's been incredible VC activity in this space, and while spinouts are definitely one of the most visible success stories, what we're seeing and what especially really excites me is a much broader investment ecosystem forming around these institutions. Universities are no longer just these siloed academic hubs. They're becoming civic anchors, places where research and innovation and housing and placemaking intersect. Universities are asking, how do we build environments that attract and retain global talent, not just students, but faculty and postdocs and founders? And that opens up a whole set of real estate opportunities, whether it be student accommodation, key worker housing, lab-enabled workspace, or community infrastructure. If you take Oxford University Development, a long-term commitment to reimagining how world-class university expands beyond its ivory towers and into a growing and expanding city. Or Newcastle Helix, where the university, the local authority, and the private sector are building something that's as much civic campus as it is a commercial innovation zone. I'll say this, though, with these kinds of investments also comes an important responsibility. Growth has to be inclusive. And when we think about these cities that are growing around universities and investors alike need to be pretty intentional about avoiding gentrification. So it's important that we take communities with us, not price them out. When we get that right, I think the long-term value is much deeper than just financial return. It also enables social resilience.
So a question for both of you is whenever we talk about potential investments, we also tend to talk about the current market and the current environment. And with university-related investments in mind, I was wondering if you could talk a little bit about some of the tailwinds that might bolster a case for these assets. Melissa, perhaps we can start with you.
Absolutely. So there's actually a lot of momentum right now that supports these types of long-term university-linked investments. So if you look at the policy side, the Mansion House reforms and some of the Solvency II adjustments are giving institutional investors a bit more runway to put capital into place-based illiquid assets. And that's creating a space for exactly the kind of longer-term patient capital that these university partners need. But honestly, I think the bigger driver is probably global. So if you take a step back, we're really in a talent race, not only for AI, for quantum technology, for life sciences and climate tech, you name it. And universities are definitely at the front line of that. But right now, international researchers and innovators alike are asking, where will I be welcomed and where can I really put down roots? Visa uncertainty and political uncertainty abroad, these are factors that I think make the UK's world-class academic institutions look even more attractive now, especially if the investment community and policy reforms back them with the right types of infrastructure. So the opportunity is there. We just have to make sure we're matching capital to the full ecosystem: labs, housing, transit, culture, not just the shiny science buildings. It's about enabling people to do their best work here in the UK.
Thanks, Melissa. Bill, I don't know if you want to add anything there.
Yeah, thanks, Nick. I mean, Melissa touched on many of the key issues, and we're certainly reassured by the political tailwinds supporting universities in this country. We can also add to that a more prosaic real estate angle in that a lot of the stock is aging and there's a lack of appropriate supply in many locations. We also like to bring out our 4D analysis when we're thinking about universities. And I know we've given this some airtime on your podcast over the last year or two, but universities are a good example of the intersection of global megatrends. So just as a reminder, we look at demographics, digitalization, decarbonisation and deglobalization as pervasive global trends. I won't go into too much detail, but for each of those 4 megatrends, universities have a part to play, whether that's demographics, understanding the flows of students and student numbers, or digitalization, which might be around the teaching methods universities use, as well as a need for people to retrain over the long term as AI starts to change the way people work and the requirement for new skills. And then, as Melissa mentioned, decarbonisation, you could point to the aging stock of university real estate in that angle, but also the requirement for training, the investment opportunities coming out of venture capital and startups that are doing interesting and important things in the decarbonisation field.
Thanks, Bill. So one of the points that we made in the report is the need to carefully select any potential investment opportunity based on the strength of the academic institution. There are obviously some headwinds investors may need to be aware of, as well as the tailwinds that we've just identified. I was wondering if you could speak a little bit about what these are and what investors should maybe be taking into account when thinking about these. And Bill, let's stay with you as one of the authors of the report.
Yeah, thanks, Nick. And it's certainly right to look at headwinds as well as tailwinds. So as a whole, we're conviction on universities and asset class and something that can provide opportunities across the private market spectrum, as we've already discussed. But there are risks out there, as there often are, and reasons to be very selective. So, saying a university-linked return is X% will disguise a lot of geographical and other types of risk that are out there. And so one of these is tuition fees, and universities rely heavily on tuition fees for their funding. Now, although fees are difficult for many students to manage, in real terms, they have gone down quite significantly over the last few years by about a quarter, depending on when you start the clock. So far, universities have been able to make up a lot of that shortfall by charging international students a bit more, but there is some risk there, of course. We're also seeing fees and the costs of education starting to affect people's choice about entering further education in the first place, which is a real shame. Now, numbers so far are very marginal, so there's perhaps a drop off around 1% in people entering full-time education with costs as a result, but it is something to look at, that disincentivization based on costs. What that means to us as investors is the importance of selectivity. So we've come out with our own system, and that seems to be checking out. So without going through all the different legal and general proprietary names, we have a trailing institutions, which, as the name suggests, would characterize the weak universities. And they have seen recently a decline in university acceptances of around 30%, so quite significant. But on the other hand, the global elite cluster, which includes many of the names you would expect it to include, but several you might not, has seen acceptances grow by about 10% over the same horizon. So there's a growing dispersion of performance in terms of student acceptances within these universities. And with that in mind, that also tends to lead the performance of the private market asset classes associated with the universities. So, yes, it's a significant headwind, but opportunities are there. But investors need to be increasingly careful about choosing the universities and the towns and cities associated with them.
Thanks for that, Bill. Again, Melissa, I don't know if there's anything that you want to add to that.
I think Bill covered most of it. I think I'd probably just highlight, we've obviously talked about some of the international student revenue pressures, but I think there's increasing pressure on housing affordability, which affects, not just the students and university staff, but also the townspeople and supporting communities around these universities. And so I just point out the fundamentals do still stack up. UK universities are among the best in the world. But the key is selectivity, like Bill mentioned. And so investors really need to focus not just on the academic brand, but also the strength of the regional partnerships, the industry links, the transport links, and the leadership vision in a place. Universities that are really proactively engaging with their communities, their cities, their local economies, those are the ones that are worth backing and probably have a longer term vision and conviction. So I would just say we have to view these investments through a systems lens. You kind of can't just look at, building in isolation and hope that it thrives, but really it's about the whole package, the research, the infrastructure, the people, and the place.
Thanks for that. So just to kind of shift gears a little bit, we know that the UK has some kind of key regions when it comes to academic institutions. People talk about the Golden Triangle between Oxford, Cambridge, and London as an example. And one of the points that the report made is actually that we're seeing some growth elsewhere outside of these key regions. I was wondering if both of you could talk a little bit about this dynamic. Melissa, particularly you, I think our listeners would be interested to hear from you about some of the conversations you have with universities or other regional leaders surrounding kind of place-based needs.
Absolutely. Thanks, Nick. I think this is one of the more exciting shifts that we're seeing in this space. So the Golden Triangle, Oxford, Cambridge, the London universities, they absolutely still matter, of course. But the narrative is expanding in the UK. So places like Manchester, like Newcastle, like Bristol, like Glasgow, they're building on their own innovation clusters and they're really doing it with purpose. A big part of that is that these universities are stepping up as true civic partners. So they're not just producing talent, they're also helping cities shape their economic futures. They're not just landlords and they're not just educators. They're sitting at the table with local authorities, with local businesses, and with NHS trusts and asking, what do our regions really need to thrive in the next 10, 20, 30 years? And how can we deliver on that together? Universities are also tracking where the skills gaps are headed and adapting accordingly, which I think is really important. So when I talk with university leaders, what they're asking for isn't just capital partners, but it's actually values alignment. They want partners who understand the trajectory of a place, what the city needs to grow, who it needs to include, and how to get there together. And what's really exciting for us as longer term investors is that there are no longer these siloed opportunities. I think the academic and the economic strategies are starting to converge. And universities are really at the forefront of this workforce foresight, tracking where job demand is heading, which skills are emerging, and how to prepare students and communities for that shift. This really creates fertile ground for partnership, but only if you really have the right relationships in place to understand a region's long-term needs.
Thanks for that. Once again, Bill, I don't know if there's anything you want to add.
Yeah, thanks, Nick. Yes, so clustering is an important consideration when we're considering university investment. In our view, clustering is good. It promotes positive feedback loops. It leads to greater growth, both for the university and the wider economy. Within that, there is some risk, though, as we see it, in that the successful clusters, particularly things like Oxford, London, Cambridge, become so successful it might crowd out other investment opportunities. Fortunately, we're not seeing that, and there is some evidence to suggest those three big universities do manage to attract more capital, but capital is still flowing to other universities. And what we're certainly observing is that universities that try and specialize in a particular discipline, whether it's emerging fields like engineering, biology, or quantum technology, etc., tend to do better. So we're certainly seeing more opportunities emerge in clusters around Bristol, Edinburgh, and Manchester. So that's growing the investable universe from our point of view.
Excellent. Thanks. We've come to our last question, and it's a question that I always like to ask on these podcasts. And that's, is there anything you're hearing from clients or potential clients that you think is worth kind of highlighting today for our listeners? Melissa, let's start with you.
Thanks, Nick. Yeah, I think a theme that continues to come up is a growing expectation that investments should do more than just perform, that they should also mean something. So clients obviously want returns, but I think they also, in many cases, want real impact, not just box ticking, but investments that stand up to scrutiny, both economically and socially. And I think these university-linked opportunities really resonate because they're so tangible. So you can point to a new biotech company spun out of a regional lab, or you can walk through a mixed income housing development near a new campus hub. You can meet a postdoc who stayed in Newcastle because there was an affordable place for them to live and have a startup space to work from. So I think it kind of goes back to this question clients are asking, how do we create long-term value that also regenerates a place? And I would just say the answer is probably to partner with universities that really do understand their civic role. It's where you're going to find not just innovation, but infrastructure, inclusion, and intent. And so if we can get that right, then these aren't just good investments. They're also future-proof funds.
Thanks, Melissa. Bill, over to you. Anything that you're hearing at the moment?
Thanks, Nick. I have little to add to what Melissa just said. Simplistically, investors do want a return. Of course they do. They want that return to be diversified against other asset classes, but also if there's a diversification benefit within an asset grouping like universities, that can be a good thing. So to give an example of that, we can divide the various different entry points across real estate, venture capital, or credit into traditional risk styles terminology. So we can look at core, we can look at value add, we can look at opportunistic, and there are opportunities across all those lenses with different return profiles to offer something to different investors. And as Melissa said, if this investment can achieve all that while doing some good, whether that's regeneration, scientific discovery, or wider economic growth, then that is a major, important added bonus.
Excellent. Well, Bill, Melissa, thank you so much for your time today.
Thank you very much.
Thanks so much, Nick.
As a reminder, this podcast is intended for investment professionals only and shouldn't be shared with a non-professional audience. The views expressed in this podcast are those of L&G's Asset Management division, as at the date of publication. This podcast is for informational purposes only, and we're not soliciting any action based on it. The information discusses general market, economic, or political issues, or industry or sector trends. It does not constitute research or investment, legal, or tax advice. It is not recommendation or advertisement to buy or sell securities or pursue a particular investment strategy. strategy. Assumptions, opinions, and estimates are provided for illustrative purposes only. There is no guarantee that any forecast made will come to pass. No party shall have any right of action against L&G in relation to the accuracy or completeness of the information contained in this podcast. Where this podcast contains third-party information, the accuracy or completeness of such information cannot be guaranteed, and we accept no responsibility or liability in respect of such information, not for distribution to any person in any jurisdiction where such distribution would be contrary to local law or regulations. Copyright 2025. Legal and General Investment Management Limited is authorised and regulated by the Financial Conduct Authority. Unless otherwise stated, references herein to L&G, we and us are meant to capture the global conglomerate that includes, in the European Economic Area, LGIM Managers Europe Limited, authorised and regulated by the Central Bank of Ireland as a UCITS management company pursuant to European Communities Undertaking for Collective Investment in Transferable Securities Regulations 2011 as amended, and as an alternative investment fund manager pursuant to the European Union Alternative Investment Fund Managers Regulations 2013 as amended. In the USA, Legal and General Investment Management America, Inc., a US SEC regulated investment advisor. In Japan, Legal and General Investment Management Japan (KK), a Japan FSA registered investment management company. In Hong Kong, issued by Legal and General Investment Management Asia Limited, which is licensed by the Securities and Futures Commission. And in Singapore, issued by LGIM Singapore Pte Limited, company registration number 2022318766W, which is regulated by the Monetary Authority of Singapore. For full terms and conditions, please visit our website. To find more content, you can check us out on LinkedIn or on our website.